What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be looking at our broad market. We've got our core list of companies that we're always watching, and this week I've got 5 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Quick reminder that all of our resources are linked down below in the description, including the Discord, which is free. So check that out if you're interested in chatting with myself and other great traders in real time. And without further ado, let's jump right into the charts. So kicking things off on our SPY weekly chart, looking at candle structure and location as always. For structure this week, we certainly have a more bearish than bullish candle, that's for sure. You can see an upper wick on this week's candle coming from the all-time high, closing, or rather pushing us through the open of the week all the way down towards the lows where we closed, so a weak close on the candlestick as well here. And there's only a little bit of lower wick, not really indicating any significant buy-side reaction down towards the lows. So for structure, the bears definitely take the win. In terms of location, sure, we did get a new weekly higher high. However, we have a weekly lower low, and we've completely engulfed the prior week's range. The other thing I would point out about location is that we're back down underneath the big breakout point here from the weekly bull flag, right? So to me, the structural elements as well as the location elements far outweigh, and again, that's to the bear side, far outweigh the one bullish data point, which is the new all-time high that we set over the course of the trading week. So it does look a little bit more bearish than bullish out there as of right now. However, from a longer term perspective, I would just remind you that if we come in with our support trend line and draw the dominant trend channel that's been in effect for what feels like months, almost a year now, we can redraw that as channel. There we go. Pop in the top resistance trend line. Look at where we're at, right? We're only pulling back into the midpoint of the channel. So it's not the end of the world in the S&P 500 until we start cracking the low end of the trend channel. The other thing we could check out in terms of trend lines would be the one from here, doing something like this. First contact point would be that October low from right around in here. We get a secondary touch there. We're still above that support trend line. And if we do something like this as well, coming from the major low way down here, swinging it out, boom, our first touch is again coming from right around in here. Even if you were to move it a little bit higher, we're still above all 3 of those support trend lines that I've just drawn in. So please don't feel overly bearish this week. However, there is possibility that we just move into this area of support on the chart because, as we mentioned, the structure and location here would indicate that there could be a little bit lower to go. Now, what's been the primary drag in the S&P 500 before we move on down to the daily time frame? It's certainly been tech, right? We know that there's been a rotation out of tech and into financials, and we can clearly see that in our S&P sectors. So let's have a look right now. So XLK for the tech sector, if we take a look at this chart, you can clearly see from the weekly, we've retraced all the way back down towards the low end of this weekly bull flag. This was nothing more than a bit of a fake breakout in the prior week's range. And if this support starts to go, we know that there's potential for lower into 160. And again, with the rotation out of tech, it's kind of all going into financials. We'll talk about the why in just a second here, but taking a look at the XLF, it's kind of the opposite, right? We're getting a firm breakout out of this resistance trend line, which we've been discussing on the midweek videos for quite some time now. So this breakout does look promising for higher here, and obviously this is helping keep your SPY afloat. I think that if the financials weren't doing what they're doing, then your SPY would be probably underneath that weekly support trend line as of right now. So again, what's the reasoning for all of this to be happening right now? Let's take a quick look at the TNX for our 10-year note. And again, we talk about this every single Wednesday. This is breaking out to the upside. Rates are dramatically increasing, and obviously that's a good thing for the financial sector, and it's a bad thing for the tech sector. So because this chart does look bullish, we would expect it to go higher here, although we don't traditionally look at rates through the lens of technical analysis. We know that the Fed is backing a policy where they're supporting rising rates, or raising rates rather. So to me, this certainly has the possibility to go higher, to continue to benefit the financials, the banks, and continue to hurt the XLK for the tech sector. So continue to monitor this relationship. The best thing I think for the marketplace as of right now, for the SPY specifically, for it to kick back into gear to the upside, would be for rates to stabilize. If these start to do something like that, that's going to be a good thing where hopefully the XLF starts to cool off. It can consolidate at the top of that weekly range we just put in. And the XLK for the tech sector might find a little bit of a footing at that weekly support low from the bull flag, correct? So stabilization of rates is going to be a good thing for our S&P markets. If it continues to trend higher, we probably have a lower S&P throughout the course of the week. If it pulls back aggressively, if rates collapse back down into like 1.5, it is going to do some damage to your XLF, the financial sector, but we'll see if the XLK starts to, reciprocate by moving higher in a lower rate environment. I don't really see that as being a likely scenario, but just something to keep an eye on. So now that we've sort of covered that, let's drill down to our daily time frame in the SPY and talk about tradable levels, the actual numbers we care about into the upcoming week. I think the main thing right now to focus on is your 50 SMA, right? We're at it on the daily time frame. We've talked about in the past how strong of a support this is. You can see a number of interactions where it bounces off of it perfectly every single time. In more recent history, sure, we've been a little bit more volatile through it here, as well as right here, but we're just right at it, okay? So as of right now, use it as a bit of a pivot point. If we can bounce above, so let's say that the rates cool off, the XLK starts to get a bounce off the low end of the weekly range, then fine. We know that the breakout point once again is back on our radar at 470.40. Anything above that, I would just start watching out for some of this congestion up here. We've talked about in the the midweek videos how there's a lot of value up here just because there was so much overlap, so much congestion there. So watch for that to act as like a high volume node. We know that the level is really somewhere around 477 here in the SPY. That's where the points of controls are stacking up on your ES chart. So that's what we have to the upside if we get some sort of turnaround off the 50 SMA. But because of everything we've talked about so far in the video, sort of pointing to lower, let's be serious about being open to the possibility for a move into some of these downside targets here over the course of the week. The first thing that would need to happen is a firm breakdown of the 50 SMA and also the 2-day lows. Essentially, we have 2 days of balance here. I would wait for some firm action underneath the low of Friday, essentially. Let's grab the other tool and mark that in. Just start treating this as a range. We know that this level from in here was really the base of the FOMC spike from this move here. So there is a lot of positioning at and around that level at the 464. If this general area starts breaking down, the first and only place we can really catch ourselves for a higher low on the daily time frame, so something like this, would be here at 460 quarter. Now, why is that the level? Because we had highs for resistance. Obviously, we gapped up and over it. But then on the pullback, we filled the gap and respected that level right around in here, nearly to the penny. So if there is going to be a higher low, that's the level that I would really start paying attention to at 460 quarter. Anything underneath that, it's all about the support trend channel from the weekly time frame. That's what this white dotted line is. There is a gap down here, so maybe that offers some support once it fills as well. That would be an area where I would really start monitoring for any types of reversal patterns in the S&P, be it on a smaller time frame, a 5-minute chart, a 15-minute chart, a 30-minute chart. If you start seeing reversals off of this area, that to me would indicate that the trend will likely hold. What you would want to see is the sectors starting to confirm that as well. So an uptick in your XLK, as well as maybe the XLF either going sideways or higher, just not lower, okay? If the XLF for financials are going lower as this is happening, I wouldn't really trust it. I would want more information. So that's what I'm seeing on our S&P daily chart. We've talked about a ton of nuance here. Let's contrast that to what's going on in our QQQ. And what I'm going to do is just show you that weekly time frame chart. It's going to look very similar to that XLK that we looked at. Once again, here's sort of, let's switch that back to white. There we go. Here's sort of that bull flag. And once again, we're sitting right at that portion of support. And to me, now that we've interacted with it once, twice, 3 times, 4 times as of the close of this week, it's starting to turn into a flush point. If it breaks, we know the next major support is coming from this shelf of highs at 369. But after that, it's really probably to here from the weekly time frame. And again, I'm not saying this to be overly bearish as of right now. I just want to know where that level is. You'll also note that we have a support trend line here on our weekly time frame from the QQQ, and we're still above it, right? So I'm not all out bearish on this, but I am starting to open up myself to the possibilities for bearish outcomes over this week or potentially into the short-term future if these areas start to break, right? We would want to know about that target here closer to 353.89, the lows from here, as well as this pullback from, I believe that was September, when the market had a little bit of a temper tantrum. So that's what I'm seeing on the weekly time frame. Let's drill down to the daily now and talk more nuance. Clearly, we've gotten a 100% retracement of this move right here. traditionally, you don't look for this to break on the first test after a 100% retracement. What we would want to see, and how this would unfold in a quote-unquote picture-perfect world, would be some sort of lower high off of a dead cat bounce, a reattempt that should definitely break it on that reattempt. That would be the fifth interaction, mind you, from that weekly time frame. And from there, that's where we would start looking for lower into some of those targets. So 369, and then as we discussed, 353.89, that could coincide with a breakdown of that weekly support trend line. That lower high would want to be anywhere underneath this area here at 388.78. Why is that the number? Again, here's your FOMC spike sort of rally point from there. You can also see it was prior resistance after the fact, support in here, and then we really failed to get up and near that level on the Thursday bounce. So again, anything that's sort of at or under that number would definitely constitute a lower high from here. And again, a subsequent test should take us lower in the QQQ. If your TNX continues to skyrocket higher, rates continue to rise, I would definitely look for this as a likely possibility in the QQQ. So that's what we have to the downside. To the upside, the only time to get bullish again on our QQQ would be a recapture of that lower high level that we just discussed, so 388.78. There's a lot of work to be done before that happens, but if we do recapture, then pull back for a higher low here. So anything that looks like this for a higher low, maybe we can start to shift our sort of perspective in the Qs to looking for more bullish activity into the resistance trend line. I would really be patient. I think a lot of people are focusing on rising rates, which is clearly doing a lot of damage in the tech sector. That's what I've got for you in the QQQ. Let's wrap up the broad market with the IWM. Of course, the small caps here. Russell 2000, what are you doing? And absolutely nothing, right? We know that this is our range. We've been stuck in it for, nearly a year now, and we're just sort of bobbing around, closer to the midpoint, but really starting to skew towards the lower third. We're getting closer to that 215 level here. The one thing I would point out in terms of pattern that could potentially unfold here, it's not a guarantee. Again, there's a lot of work that would have to be done for this, but maybe this starts to act, if we turn around here, as an inverted head and shoulders, right? You get something that looks like this. Your neckline breakout point is all the way up here around 226.69 for that gap fill. So again, a lot of work to be done if that's the pattern that's going to unfold, but it's just something to keep in the back of your mind. As of right now, IWM is still sort of signaling, hey, neutral risk out there. It's not the end of the world yet. And that sort of aligns with everything we've seen from the longer perspective, at least in the SPY, the fact that we're still above all three of those support trend lines. Now, if we do come in and start testing 208, that would not be a great sign for our broader marketplace, noting that if that breaks down, we have a year's worth of consolidation and a fake break all working against us for a larger downdraft in the small caps. So really a lot of emphasis on 208 if the broader marketplace continues to move lower. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So kicking off our companies here with Apple, this one is of course making a bearish move over the course of the week with 2 days of bearish consolidation towards the lows on Thursday, Friday. It's certainly no safe haven from the rising rates. So to me, again, short term, it definitely does look like there's some more room to move lower, especially noting the structure of the Thursday and Friday candles. If we zoom in a little bit here, I would just point out that we opened on a gap down for Thursday. We filled the gap. The sellers really stepped up, closed it weak, and then just a resting bar on the Friday session. So to me, a breakdown of these 2-day lows easily takes us into 168, and then anything underneath that, it's all about your daily 50 SMA. We have not tested that level in quite some time, so I would imagine that there are some buyers waiting to sort of pick it up at the quote-unquote discount moving average. So to me, I would put a lot of emphasis into that, but please don't just jump in immediately with a falling broad market in an environment where rates are dramatically taking off to the upside. So please be a little bit more careful, noting that, rates are going to start hurting us, right? 2022 market is starting to feel like a different market than the 2020 and 2021 markets together. So that's what I would say about Apple to the downside. Obviously, upside will be unlocked if we take out the 2-day highs. Looking for a retracement of some of this move, noting it was fairly emotional. The main area to get back above would be the low of the first initial pullback from in here. That's 177.50 roughly. From there, I would want to see some consolidation and then a potential break, noting that a significant amount of work would have to be done for a move like that to unfold. Again, I would want to see some pause, let the buyers recharge, and then a reattempt for higher. But as of right now, it does seem like down is the likely direction. Let's continue on and talk about Netflix. This one is just totally falling off of a cliff. We've known that it's relatively weak. It's still resisting at the resistance trend line there. Sure, it did start to break it a little bit sideways through time, but ultimately, significantly underneath it now. We're also back down underneath 554, let's call it 555 for round number sake, which we know was a very important level here inside of Netflix. Big resistance from in the past. So the fact that it's just sliced right through it, to me, it's starting to feel a little bit overextended. Generally, I would have liked to see a bit of a dead cat bounce, another lower high, and then something like that for continuation. So are the sellers getting a little bit ahead of themselves in Netflix? I would start to say yes, absolutely. This would be one of those candidates to say, if there's going to be a dead cat bounce, if tech starts to perk up even just a little bit, Netflix would want to be one of those names where I say, okay, the sellers look a little bit overdone. Anyone who was late to the party, in here, they're going to probably start covering if we can get back above that 555. It's also Friday's high, right? The other thing we have to contend with in many of these tech companies is that earnings will be sort of later on in the month. And generally speaking, things get a little bit more bullish into earnings. It's not a guarantee that anything goes higher here, but it's just something to think about and have in the back of your mind. So that's Netflix in a nutshell. In terms of downside targets, since we are, breaching some of these levels, I mean, look at this. We're already at that next consolidation low point. So from in here, also resistance from there, little pullback low in there. The next one that I would really focus on would be this number at 526.36. Call it 525 if you like nice round numbers as a downside target. And I mean, if this thing totally falls off a cliff over the course of the week, which again, I would not anticipate, I wouldn't be chasing this short as of right now, but I do want you to have some levels. Again, you're looking at 507. So here's some scenarios, right? If this continues to sell, it's getting a little bit overdone. If we were to come into 507 and print a hammer candle here, I would definitely have on my radar long up and over that high, looking for a dead cat bounce, squeezing any shorts who are late to the party in Netflix. So I know we spent some more time on this one, but it does look like there is potential for this one to be overdone to the downside. Let's continue on and talk about Tesla. Oops, we want the other tool so we can zoom. Apologies for that. Zooming in here, what we'll notice is clearly the gap did fill from here to here, but more importantly, we've firmly closed now back underneath that 1065. On Thursday, it did look like there was potential for a dead cat bounce with that extreme lower wick that was put in. The hammer candle was looking fairly nice, but we never took out the high of the hammer, so there was no reason to be looking for those longs. Instead, we've closed relatively weak, and to me, it's just all about the big bad round number, 4 figures here in Tesla, 1,000. If we bounce off of it, fantastic. We do still have the risk of a lower high now that the resistance line could be in play one more time. Remember, we did gap up and over it and then failed back underneath. So to me, it would certainly be valid if you were to extend it there. So 1,000, either looking for bounces. And if we start to break, we know look out below, there's another gap to fill from 957.31 down to 940.02. That would primarily be my first target. And then we would reassess, right? Is there possibility for a higher low on the Tesla daily? Or are we going to come directly in and form equal lows at the prior all-time highs? That would be fairly concerning in my estimation in Tesla, and from there we would have a much more bearish outlook. So that's Tesla in a nutshell. Doesn't really look bullish. Obviously 4 days of aggressive down, negating the hammer candle from Thursday. If it were to be long, it would have to be just simply up and over 1081. Again, just like in Netflix, anyone short late to the party in here would probably start to cover if we take out those 2-day highs. Next up, we have Alibaba. This one has been showing some decent strength in the face of, a completely, I don't want to say completely falling apart, but a pretty bearish tech market nonetheless, and certainly curling higher here. This to me was a big fake out. I'll completely admit that. I thought it was going to be short under the 2-day lows here, but didn't unfold that way. Instead, we are getting an inverted hammer that printed off of 130. We know that's been a very important level. It was the prior double bottom on the weekly from, I believe it's 2018, but more importantly, in recent time frame, it was resistance on the dead cat bounce, right? So to me, it's all about underneath the low of Friday's candle for a retracement to the breakout point here around 124.13. If that happens, I would be on the lookout for reversals off of this area to see if Alibaba is going to be the sort of, what would you call it? The one sheep out of line. I don't know what metaphor I'm looking for here, but you get my gist. The one bullish ticker out there. If it supports here and turns back around, maybe Alibaba's the one for a long for this week. So that's what I would kind of watch out for. Pull back based on the inverted hammer, but see if we support at the prior breakout point 124.13. Anything underneath that, we know we're going back down to the 2-day lows as discussed prior, 115.85. Next up, we have Facebook, and this one is continuously chopping around, giving us absolutely no direction. It's probably been the hardest one to trade because, I mean, just look at this. We have a day down, looks like it wants to break the flush point, big day up, then a day down. Lack of follow through all over the place inside of Facebook. So I would really encourage some patience in this name right now. For me, it's got to be outside of this 3-day balance right here. So either up and over 366.50 for the rotation up towards 350 roughly, or down and out underneath the flush point here at 323.25 for a move into 310 roughly. So those are the two bigger trades that could potentially unfold. Don't get me wrong, if you're trading around in here and you're a scalper, there's a nice 5-minute flag in here that looks like it wants to go higher off some sort of gap down. You know, whatever, trade around in this range as you may, but the larger moves are only going to be produced if we can get either over 336.50 or under 323.25. So we'll leave it off at that for Facebook. Next up, we have NVDA. And zooming in on this one, also looking fairly bearish out there, right? It doesn't really look too attractive for longs for the simple reason that we have all of this overhead resistance now, 50 SMA, resistance trendline. I mean, it's just going to be very difficult to get through all of that. And to me, it's starting to form more, loss for words there, more of a descending triangle as opposed to a bullish pennant on the daily, right? So if this area starts to go, we know that the larger trade is really down towards 250 on the break of 267.82. Anything underneath that, we're looking at the gap fill from in here. And I would probably leave it off at that for at least into the earlier stages of the week. If something dramatic happens, we will cover it in the Wednesday video. As we talked about, there's a lot of overhead resistance, but if we do break the 2-day range, maybe there's a scalp in here for long, but I would really use a trail stop. Make sure to lock in those profits because we're clearly forming lower highs, right? Lower highs, lower highs, lower highs, lower highs. You know, I wouldn't be surprised if we get some sort of lower high to continue this short-term downtrend. Another reattempt at these lows. Again, big flush point has been built. I would expect lower into about 250. So NVIDIA, kind of a tough long, really watching for either more sideways, build a flush point out, and then a flush for literally 250, as we just discussed multiple times. Next up, we have Microsoft, and this one is certainly bearish, breaking down firmly outside of the 100% retracement, right? So this has retraced more than 100% to that 318, which again is fairly rare. What you like to see is a little bit of a bounce off the 100 and then a lower high for the break lower inside of Microsoft. So for that reason, it's been very hard. You don't want to chase this short here. We do have 2 days worth of balance. So just like almost everything else, if you want to play the clean trade here, it's either back above 318 for a retracement of this range, potentially into this 329.25, or a flush of the 2-day lows for a move into this around 305.50 coming from this breakout point from in the past. We're going to find one more support underneath in case tech really takes a beating over the course of the week. I know it seems far away, but that certainly could be on the table around 293.50. We're going to find one intermediate level. I'm going to sort of split the difference and I'll show you what I'm talking about here. So I'm capturing the low, high, some highs in here, and then highs, and then low right there. So I'm splitting the difference and getting 298.50 as an intermediate if 305.50 breaks before the lows that we pointed out here, 293.50. So I know, again, it does seem like far away, but just want to be prepared given the nature of what's happening in rates and the relationship with tech. We talked about upside bringing us closer to 330 on the break of the 2-day highs. Last but not least, we have Amazon, and this one also, I mean, it's just the same thing, right? 2-day balance in place. It's long, either up and over these highs, a recapture of this general 3,300 mark. I would watch out for the resistance trend line. Don't overstay your welcome to the long side, but that would be the target, closer to 33.50 if it's early on in the week. And if it's short underneath the 2-day lows, it's all about 31.76. We know that that's a fairly important level inside of Amazon. Big double bottom from this move in here. Boom, and then boom right here. So again, really putting a lot of emphasis in that one. Because we haven't tested it in quite some time, I would expect some support to come into play there instead of just cleanly breaking right on down through that. So those are our core list of companies in a nutshell. Let's get into these trade ideas. Quick reminder to hit the thumbs up button, subscribe to the channel, hit the bell button, all of that good stuff YouTube tells us to tell you guys, and Lucid is going to be our first trade idea. The reason that this is making the list today is because we have a clearly defined range in place. It's been bullish, extreme relative strength to the marketplace, and I'm not saying it's just going to immediately break out and continue here, but we are at the top end of the daily range, daily balance, and we always know that we have some rules to put into place here. So what we're going to do is put our rectangle back on. Again, at the top end, you either have chance for breakout or mean reversion. In the case of mean reversion, what you would want to see is a move lower into about 39.65, call it 40 roughly. And what we would watch out for is, can we give ourselves a higher low, reattempt the top end of the balance again, and in that instance, I would be looking for the breakout higher into roughly 47 coming from this breakdown point and a dead cat lower high, right? This area right around in there. So that's what I'm watching for in Lucid. Again, given the relative strength, I would prefer to see, again, some sort of bullish trade set up here. But if it is going to be short, then obviously monitor for continuation through that 40 if the pullback does happen for a rotation here into the low end of the range. The other bearish trade idea that could come from this would be the look above and fail, correct? So watch out for this as well. If we get a poke up and over but fail back down into the range, we know that the target should be here at the bottom end, 35.87. So a number of opportunities available here inside of Lucid, given the nature of the balance and the location literally right on the edge of the upper limit. Let's continue on and talk about AMD. This one is pulling back more aggressively, but more importantly, it's giving us an equal low. Okay, so we have lower high, lower high, lower high, and now low and equal low. So to continue this little short-term downtrend that we're in, I would expect a breakdown of these equal lows. We know that tech is relatively weak with those rates that are soaring here. So the first sort of move lower would be probably a day trade into 127.89s, roughly this area from in the past there. But even if that one starts to go, this is probably a longer term trade to get us into the support trend line, and also 118.67 coming from, if I scrunch this chart up, not only was it this pullback low, but it was the prior all-time high inside of AMD. So that's what I'm seeing to the downside. It is a short trade idea. If we do get some sort of dead cat bounce, again, just like almost everything else we've discussed today, your sort of lower high wants to be beneath the 2-day balance highs around 137.56. Next up, we have BMY, and this is the only bullish trade idea that I got one more for you. I'm sorry, I have JPM, but this is one of the two bullish trade ideas, and we're quite simply putting in this here. Okay, so we have a bull flag in play, looking for the breakout higher. We have 65.25 coming from back in here. You'll notice, got to go a little bit further, splitting the difference between the pullback low, then resistance, big shelf of resistance there, resistance, support. That's the first target. Again, it's the first daily bar that's closed up and over 62.67. A couple of fake breaks from in the past here and here, as well as right there. So we'll see if we get the follow through. Obviously, as we mentioned with the Lucid trade, if it is going to be a range bound deal and we fall back down underneath, we know the target should be the low end of the range on the look above and fail. This is your line in the sand though, roughly 60.88. As long as we're above that, continue to monitor for bull flag consolidation. If it starts to go, probably just taking this one off of your radar. Next up, we have JPM for JP Morgan. And again, this is a fairly bullish trade idea simply because of what's going on with rates, but also because we have earnings around the corner. So please do factor that in if you're an options trader. But if in anticipation to earnings and with raising rates, potentially there's a breakout here out of this now 4-day balance up and over 168.44. If that happens, we're just looking at the highs from in here. So let's go ahead and throw that on as a level. That's 172.41. To the downside, I would be careful here. I wouldn't really try to trade this one short given the relative strength, given what's going on with rates. But if you're a scalper and you want to try to pull it off, there's a gap underneath us. You could trade for that to fill underneath 163.77 down to 162.63. So that's what I've got for you in the banks. And then the last trade idea is here on CRM, again, a tech sector stock. And if we look at the balance in play, we have 3 days of balance, but a pretty bearish 3 days. And the reason it's a bearish 3 days are because we have well, first of all, gap down, right? So we have a high, a lower high, a lower high, and then we have a low, a lower low, and then an equal low. So really bearish acceptance down here closer to the 230 mark. I would say if we can flush the 2-day lows, 3-day lows, essentially, if you want to split the difference at 226, easily a move available into about 217.57. That level is coming from, if I just move this chart off to the left, you'll notice I'm splitting the difference between these highs from here and then some resistance in this general area. The next level underneath us at 208.97, call it 209, is sort of the same deal. Again, splitting the difference between some of those lows and then the pullback low, the true pullback low from this downdraft back in, what was that, 521. So that's what that was, okay? And that's where those levels are. To the upside, again, I would not recommend trying to play the bullish trade idea here. However, if you're quick draw McGee off the open and you want to trade for this gap fill overhead, it's from 238.17 down to 243.54. That's going to wrap up the video. 5 trade ideas, a number of them bullish, a number of them bearish. We've talked extensively about the rotation out of tech and into financials with soaring rates. So keep all of that stuff in mind as you continue to navigate this fairly tricky market in 2022. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel, secondary channel, is linked down below in the description where we do 10 to 12 video ideas every single day. And with all of that being said, I wish you a green trading week.